Okay, guys, just as I'm wrapping up for bank holiday weekend, I keep trying to get away from the desk, but failed miserably. I was meant to be finished at 12 o'clock. It's now quarter to four. So that didn't quite go to plan. Um, Now, quickly on Ask Scruff, if I pull this through and I pull this down on here, it's quite a simple question by CAG. So it's a little salute to you. When marking up your higher time frames, your monthlies, weeklies, etc., do they lose importance the older they are? For example, prices moving up to a weekly level, but comes from a turning point more than 12 months ago. No. See, what you got to remember is the markets have an extensive memory, a huge memory. And just because it was 12 months ago, that doesn't really mean anything, because really in a monthly candle, that is only 12 candles. So on that chart, it's actually in recent history. But if you had 12 candles on a 5 minute, that history is so close to the price right now, it doesn't really mean anything. So it's the yin and the yang. Let me give you an example. I was working on Eurodollar today. So if I just sort of come down into this chart and clear it to nothing, okay, and we look at, say, an hour's chart, all right, you can see a structure wave there, okay? Price slammed down, and then it goes into waves, and then eventually gets to the price. So if you were looking at that, you would think that is wonderful. Well, okay. Well, look at the principle here. Well, there's a turning point there, right across these, which in reality was respected here and here, okay? But how many candles was that back? Well, let's take a drawing tool. So from that point to that point where it retested was 61 candles, all right? So if you're on a weekly chart and you see that exact same structure, it is the same, except that would be 61 weeks. Right. Well, let's take this back. How far was that? Because we still think that's relevant. Well, that's 88 weeks. Come back here, 120. So you can kind of see how this is made up. Just because it's there doesn't lose its weight. Now, on an hourly chart, because the main money is looked at from this sort of structure, this is where these levels become important. So really, that same structure, because if I just showed you that move there, but didn't tell you what the time frame was, you could assume that's an hourly chart, but it's not. It's a daily chart. Okay. So if you're looking at 120 candles back, or 120 days, so really there's a structure point there, and that's 200 days ago. But 200 days ago, it was up here. So the principle is the same, but let's just take this a little step further, shall we? So in answer to your question, without getting too far into it, is the market has an extensive memory. In fact, there's a point there and a point there. So what's the distance? Just out of curiosity. That's 115 candles, and it respected the exact same place. Okay, so your hourly and this is the same. The difference with the hourly is one of these candles can blow straight through it. So those don't hold a lot of weight too much. So they only act as entry exits, not bounce points. Okay, so let's have a little look at this on a big scale. So what can we see here? Similar sort of structure. That was repeated here. This was repeated there and there. So what's the distance between these? Well, there's a candle and across to there. Well, That's only 37 candles, but it was over 1,000 days. So the structure is the same. Now you can look at moves. Well, here's a good point. 2015, there was a colossal drop. Take an extension, drop that down to there. That's where it bottomed out. Pull that back up and across. That pivot, which is here, was respected here and here. And it came from a move that was here. So in 2015, it showed a move 3 years later and in 2021. But not only did that move show this pivot across the time frames, it's also showing where an expansion was, which is here, pretty much to the pip, and that's 7 years apart. But that would have been a strong point to bounce away from. You've got the where the marker came from, which is here. And again, that level is respected here, 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 and here. And if we put a retracement onto this bad boy so we can see where the 23 is, just drop that onto there and run that across. The 23 retracement, which is respected right the way along the timeline, so it's not coincidence. The price is stalled bang on it right now. Then as it moves back up into range, that is the next stall point. These fib lines will still hold a memory. And that's where they are. But you can tighten them up now because of this one. So if you run a fib line on here, which is the current fib that's in motion, and you drop that down, again, that started in 22, is the pivot area. So the candle started here, down September 22. That pivot came up, and it respected that pivot point right the way through till today. So 3 years. So what I'm essentially driving at with that sort of video is, if you know where the levels come from, in this case, the monthly, weekly, daily, as they concertina into the daily, you get to know where they came from. So a monthly that is formed and then sort of refined slightly on a daily, you know, has quite a lot of weight in it because there's a huge amount of data behind it. In other words, it takes a lot of money to make that swing, and also those candles carry all of the information of the weeklies inside it, the dailies and the hourlies, etc. Then it waters down slightly into the weekly, but it also enhances what's going on because you're now fine-tuning. And the enhancement is you're getting closer to the price. So if you see sort of a yellow and a red one together, you know for a fact that they're rock solid, absolutely rock solid. So if the price is coming to it, the chances are it'll stop and think before it moves on. And if it is going to continue in the trend, it'll stop at the next one. And then you have a daily, and a daily for all, they are pretty strong. They're not quite as strong as the other two. But if you were to just look at it from a day trading perspective, they pretty much hold the same weight in the sense that the price will stop at them regardless. It's going to stop. So that's it. So I wouldn't take too much into it, but it is important to draw your monthlies, your weeklies and your dailies in and then tighten them up to where they clearly turn on a daily chart. So that's kind of the way I would look at that. Hope that helps. Catch you soon.